Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the ECB Interest Rate Decision, a huge event potentially for the market. But before we get into all of that, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, indeedy, happy ECB Day. Happy ECB Day. And the market is anticipating a jumbo rate hike. When I say a jumbo rate hike, I mean a jumbo rate hike for the ECB. But let's face it, when they've been making their interest rate decisions, they've been pretty tepid and pretty slow to react. They did shock us last time in their last meeting when they did 50 basis points. But to be fair, they've taken so long to do it, they had to do something like this. But the market is really anticipating a potential of 75. In fact, the market is pricing in a 66% chance of a 75 basis point rate hike. However, it could still be 50 or 75 because they need to be aggressive. Because like everybody around the world, every central bank around the world, we are currently gripped in a war against inflation. Now, don't forget, the ECB mandate is to achieve a headline rate of inflation of 2%. That's CPI year on year. That's including fuel and energy. 2%. Okay, 2%. That's their mandate. That's their goal. Inflation in the EU at the moment rests at 9.1%. So they've got a fair bit of way to go before they can get to 2%. So they need to start taking action. They really do. I mean, if you look at the globe in general, obviously the UK is at 10.1, which is just frightening. But EU is not that far behind the UK, realistically. They're a percentage behind. So they need to get a grip on this if they're going to hit their mandate of 2%. Now, the Fed, they have the same mandate of 2%, and the Fed have been pretty aggressive. But like I said before, the ECB have taken their time somewhat to make decisions and to do with this. And there's, of course, there's the Russian issue. This is the question. Can they be this aggressive? Can they be aggressive like the Fed? Because the US doesn't face the same energy issues like the EU do. I mean, for example, Nord Stream 1 is now shut down. And the big problem is the current storage capabilities are insignificant to pass winter without cuts. And this is greatly going to affect many countries during wintertime, in particular Germany. It's under the most strain because they are so heavily reliant on gas for heating their homes and for their industry and for industrial reasons. So, you know, this is the question. Can the EU economy handle higher interest rates? That's the question that, you know, in many ways, I've said this about the Bank of England beforehand. They're in a rock in the hard place, okay? They know that the economy is slowing down slightly, okay? But they need to fight inflation. And the only real tool they have to fight inflation is with higher interest rates. So is now the time to do it? In my personal opinion, now is the time for the ECB to act. Because look, even though there is still a slowdown, the EU economy grew by 0.8% quarter on quarter. Unemployment dropped to 6.6%, which is still very low for the bloc. But they need to do something. They need to raise inflation because apart from the headline rate, core CPI year on year, and that's something at core doesn't include likes of fuel and food, is still at 4.3%. So while they have quite a strong, well, reasonably robust economy at 0.8% and unemployment is manageable at 6.6%, now is the time to act because they only have a very small window before things get worse, and then higher interest rates is really going to affect it. And the other problem is this: the euro dollar is testing or hovering around lows of December of 2002. Okay, that's good for exports, but that's not good for imports. So they need to try and help exports, including fuel, by the way. So they need to boost up the single currency as well. So they really generally need to act now. The other matter is this, okay, 30 minutes later after this event, which potentially could be massive depending what their decision is. You have the ECB press conference, which happens 30 minutes later. And those of you who watched, we do watch-alongs before, and I've talked a lot about the press conference, and Lagarde in particular, Christine Lagarde, she's extremely dovish. So she can have a potentially negative impact. What they will watch with this press conference, okay, is whether or not, okay, I need to speed up because I'm running out of time, whether or not she will hint at a 50 basic point rate hike in October. Anyway, the Lagarde effect, like I call it, she's a very, very dovish. We're going to have extra volatility, though, potentially around this time, because at the same time, we have Powell speaking. Usually, the heads of central banks speak differently, but he's speaking pretty much around the same, about 25 minutes after she starts. So, yeah, she goes on at 12:45 p.m. He goes on at 1:10 p.m. UTC. So anyway, let's go through some potential scenarios. Scenario number one, they raise rates by 75 basic points, moving interest rates to 125. Euro gets a bit of short-term boost. Scenario two, ECB raises rates by 50. Euro drops on this appointment. ECB raised rates by 100. Euro moves higher as bulls drop in. That's very unlikely. Scenario number four, final scenario. ECB raises rates by 75. Market hardly moves as it's already priced in, and it waits for the press conference. So anyway, let's get ready because it's about to happen any second now. So here's the euro. Okay, we can see already. Okay, spike down lower. Let's see what it is. What they've done. It's moving higher. Currently trading at 1.0028. But what has been the news? What have they done? Hang on, it's still working it out. Let's have a look. Bear with me. What is it? Come on. Okay, let's cross-reference this because last time, let's have a look. I think they've done 75. As anticipated. Let's have a look. Let's confirm it. Yes, they have indeed. ECB rates hiked by 75 basic points as expected. So they raised rates by 75. Interest rates now stand at 125. Euro in general, little reaction at the moment, which pretty much I think it was scenario 4, because I think the market has really been anticipating that they were going to do 75 anyway. So by the looks of things, it is pretty much priced in on the initial reaction. So I really think, they have gone 125. Yes, indeed. Thank you, buddy. It is indeed raised by 75 to 125 now. Nice to see you, by the way. I hope you're well. So as it stands at the moment, pull it out a little bit. Yeah, bit of a spike down initially. Obviously, it's digesting this as well. So a little bit of a spike down. But I think what we're seeing at the moment is scenario 4. Like I said, ECB raises rates by 75. Market hardly moves as it's priced in. And really now what they're going to be doing is waiting for the all-important press conference, which I think is going to be the market mover now. Because will Christine Lagarde, will she commit to doing 50 in October? 50 in October. So, yeah, that's the next big thing. That's the next big thing, which is in 30 minutes, obviously, in 30 minutes. So, yeah, that's it. That's the headline rate. 75 as expected. But again, all they're doing, to be honest, is following suit on what the Fed has been doing, what RBA has done, the Reserve Bank of Australia has been doing, Bank of Canada has been doing, who have all been doing 75. So they're following them. So they're now more part of the 75 basic point club. The next central bank, of course, who's going to be pressured into doing that, which is unlikely to do that because of the states, the Bank of England, which of course is making their interest rate decision next week. So there'll be the next one. But like I said, I think really now, like I say, the big action, all the attention now is going to be on the press conference happening, like I say, in now probably 26 minutes time. So that's not 26, 23 minutes time. So let's watch the attention on that. And I will do a little bit of a special coverage on that, not live, unfortunately, because it's a press conference, but I will be doing something on that. Don't forget, you can ask me questions anytime at all, anytime you wish, or by all means, like I say hello, give me your opinions. Tell me what you think. Is Christine Lagarde going to be extremely dovish come the press conference? Is she going to be, her typical self? Or is she going to shock the market? I think what really, in the press conference, what's going to be important more than anything else is some form of committal for doing 50 in October. So she will need to do that. She will be pushed on that. But that's going to be one of the most important things, I think, will be that when she's pushed on that. She needs to, she's funny because she's never very direct with anything either. Yeah, I dovish, I would agree. I think she will be dovish. I think it's in her nature. I was saying to another analyst before I came on air, we were talking about the press conference being probably a bigger event than the interest rate decision. We said that she couldn't be a hawk if she even she dressed up in a hawk costume. So, which I totally agree with. So anyway, we'll have to see. So the press conference is obviously going to be the next major event. As it stands though, like I said, we just bring up the euro dollar again as well. It's slight, again, it's just flirting with parity, slightly dropped down a little bit lower, 0.998. So, yeah, so it's just flirting with parity. Let's see if that level of interest there, which is, where is it here, can hold, or is it going to start changing its mentality? But it's a little bit of movement downwards. But like, again, it's not a huge move for now. But let's see what the press conference brings. Let's see what she says. See if Lagarde is going to be what we all possibly anticipate. Like I say, don't forget, you can indeed ask me questions. I was a bit late on today because I had a technical problem with my camera. So I did rush through a lot of the stuff I wanted to say because I was running out of time for the announcement. So my apologies on that. Okay, no problem. If there is no further questions, don't forget, if you think of a question later, you can put it in the comment section, either on Facebook or on YouTube. I will see them and I will reply to them next time I'm live on air, which of course will be probably maybe a little bit earlier because usually I go on 2 p.m. UTC to cover the US session. But because of the press conference, I might go on a little bit before that, maybe at 1:45 p.m. UTC. So we can still cover the US Open, but I really want to discuss what was said in the press conference. Hi again, Eric. Hi, Eric. How are you? I hope you're well, buddy. Really good to see you. Really good to see you. Thank you for coming. So yeah, I'm probably going a little bit earlier today for just because I'm going to be fascinated by the press conference, what she says, plus the crossover of when Powell's speaking and she's speaking at the same time, the volatility that might bring. So I might go on a little bit earlier. Yeah, thanks. Oh, good man. Good man. It's really great to see you, buddy. What do you think about that, though, by the way, Eric? All good. Ah, good man. Good man. That's exactly what I want to hear. But yeah, are you surprised by 75? I don't think anybody's really surprised by 75. What would have been really good, though, if you agree with me, Eric, if they did 100. Wow, that would have been awesome. That would have had a lot of market movement if they did 100. That would have been good. But no, 75, as expected, but never mind. Like I say, let's see what happens in the press conference. Yeah, I would agree. To be honest, when Jay Powell speaks, like I say, it's what's going to be interesting about this, it crosses over at the same time as Lagarde speaks. So that would be interesting. I don't think he's going to say anything new from what he said in Jackson Hole, though. I still think he's just going to underline how hawkish he is. And you know what the markets are like. Markets sometimes has a short-term memory. And even though we are expecting the Fed to be hawkish and do another 75 on the 21st of September, they're likely to forget about it and then be shocked again when Powell speaks and says, no, we're definitely going to be hawkish. Get over it. This is really happening. 125. And it is 125. They did 75 basis points. 125. Like I said, I think what's going to be interesting is, are they going to do what they're going to do next? Are they going to do or commit to 50 again in October? I think that's going to be more important. But it's going to be interesting to see the crossover of the two speeches at the same time, because that never happens. So you usually do it on purpose to try and avoid causing volatility at the time. Good to see you though, Eric. Thank you for coming. It really is great to see you. Is there any other questions? Anybody else? I mean, what does everybody else think? Do you think Powell's going to be telling us something interesting? Or is he just going to underline what he says? And am I wrong about Lagarde? Is she going to surprise me? Is she actually going to be hawkish this time? Though I think she'll need a really big hawk costume to be that. But, okay, not to worry. If there is no other question... Oh, hang on. She should be hawkish so Powell doesn't take the limelight. I don't think they consider it a competition between the two central banks, though. I think technically they should. Oh, well, hello. But that's interesting. Powell will ease the markets. You reckon? Nice to meet you, Ali. Nice to meet you. Powell will ease the markets. Dovish all the way. Well, look, it's funny, actually. It's funny you should say that. Because let's face it, in the past, before obviously we faced this inflation crisis, he was always considered quite dovish. He was. Certainly, if you look, nice to meet you as well. Really nice to meet you, Ali. Really nice to meet you. Thank you for coming. But if you look back on him, back in November time, actually, I think it was a speech he was doing in November, and he was pretty dovish. He said he wasn't concerned by inflation. He wasn't, and he's always been a little bit dovish. It's only this year that he's been really hawkish in his speeches and statements. But like I say, it's almost like things when he first started becoming hawkish as well. If you notice when you watched him, it was almost like he was doing something he was uncomfortable with. He wasn't used to being that character, being a hawk. So that's why, for example, he's so uncomfortable. He seems to fit the role a little bit well now. So Ali, it'd be easy for him to ease the markets, but I don't think he will, because they want the markets. Because I remember another Fed member said they were happy for the market to crash because they suddenly realized the market was finally listening to them. It's a little bit scary that at the same time ECB and Fed make it again is unnormal. It is strange. You're right, Eric. It's strange for them both. There is a small 25-minute window between the two, so that is really unusual, especially the crossover. I think obviously Lagarde is speaking. I'm not quite sure where Powell is speaking. It's not, but I'm not quite sure where he's doing his speech actually. But the markets are going to be watching both. I was watching Bloomberg. They said they were going to try and flick between the two and see who they're saying. I'll be watching obviously both at the same time. But it is weird. It is strange that they're doing it at the same time. And like I said, it could really cause a lot of volatility. Do you know, Ali, that's a really good point. I totally agree with you. I tell you something which I talk about a lot on this program. A lot about this. And that is, I talk about the housing market a lot because in my opinion, the housing market doesn't get enough attention by the financial press. And the housing market is huge in the likes of the US, Canada, and UK. Okay, huge in these areas. And they have, like I said, Canada actually has the biggest population of homeowners, followed by the United States and the UK. And with higher interest rates, obviously it hits the homeowners because it costs more for mortgages. And we are seeing a big decline in the housing market. And I think you're absolutely right. I think that's a bubble ready to burst. I don't think for a second it's going to be like the big housing market crash in 2008, which we experienced, because that was massive. That caused a global well, wasn't the main cause, but kickstarted the massive credit crisis. But they don't talk about it enough. But yeah, that I totally agree with you on that. And I think with equities as well. I did a video yesterday about a JP Morgan, Morgan Stanley analyst who I agree with, MJ Wilson. Very good. He actually called the crash this year at the beginning of the year. So he was spot on with that. But he actually feels that, again, the Fed raising interest, he actually said this way, putting Fed doing interest rates, it puts fire on stocks, and the economy, it's like the housing market, is going to start getting frozen. So they call it fire and ice. And equities, he actually thinks the S&P could touch 3,000 points. So I think they are. And I think what we saw in August, and I think you're absolutely right, Ali, I think what we saw in August was a bear market rally. Totally agree with that. And it's all for, yeah, I do. No, he doesn't want to be that guy. I mean, like I say, look, politicians make decisions for the votes, doesn't he? So absolutely. But it's, I don't think it's the end of days, but I think we are in a real tough spot. And I totally agree with you. Oh, bless you. Ali, thank you ever so much. Thank you. I really appreciate it. And thank you for coming. I really appreciate it. That's really kind. Thank you ever so much. Thank you. That's it's made my day. It really has. So thank you very much to that. Bless you. And yeah. Okie dokie. Anyway, we need to get ready for the press conference. It's happening in 15 minutes time. 15 minutes time. So like I say, if you think of a question later, unless there's any more questions or opinions, by all means. If there isn't, don't worry, not to worry. If you think of a question later, put it in the comment section, either on Facebook or YouTube. I will see them, and I will reply to you next time online. I go live, which again, like I said, probably be 1:45 p.m. UTC to cover the US session and to cover what is said in both Powell's speech and obviously Lagarde's speech. And we'll do a competition who's going to be hawk, who's going to be the dovish. So please come along for that. Anyway, as I always say, if you're watching me on Facebook and enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little episode, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, give me one of these. And you've put up with me as well, because I'm over the top enthusiastic, but I can't help it. I love the markets. Give me one of these. It's nice to know that that you like what I do. But can I give a special shout out to Ali? Really lovely to meet you. Eric, fantastic to see you again, my friend. SMF 790, brilliant to have you along again. And Kim, and all of you for watching me and taking the time out to watch this video. I really appreciate it. I really do. Really do. And I absolutely love the interaction and the questions. Really makes my day. Anyway, till next time, don't forget. Oh, bless you. Thank you. I really appreciate it. Thank you, Ali. I really appreciate that. Thank you so much for the interaction. Thank you, Eric, Ali, Eric, SMF 790, and everything for your questions and the interaction. I really appreciate it. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.